I'm Greg Hunter. Welcome to USAWatchdog.com. Well, the money printing extravaganza continues. Now they're talking about yet another, a fourth round of money printing, another $2 trillion that we're going to sign into law. That the president's going to sign into law. And listen, I like Donald Trump. I think he's going to default on the debt eventually. But a guy that predicted this a long time ago wrote a book. It's the coming bond market collapse, and that's what people aren't worried about. They're not worried about the other shoe, and the bond market is, orders of magnitude bigger than the stock market. Everybody's worried about the stock market, worried about their paycheck, but printing all this money is going to have a downside because I gave it away. It's Michael Pento of Pento Portfolio Strategies is on to talk about, well, the bond market and the other proverbial shoe dropping. Michael Pento, thank you for joining us today on USAWatchdog.com.
Greg Hunter, thank you for having me back on. And before we begin the interview, I just want to say, you were, and you avowed this, you were fired from CNN, and you stepped out on faith and started USA Watchdog. And I just want to thank you for that. You were in the vanguard of predicting this crisis, this depression that we have globally. You were in the vanguard of warning people to protect their lives. And I just want to thank God for you and for USA Watchdog.
That's very kind of you. Some people are telling me, so you've been talking about this for 10 years. I said, for the little guy, you need time to get ready. You need your car title. You need your house paid for. You need to buy metal. You need to buy food. You needed a lot of stuff. You needed to be able to have a plan. I mean, you needed a lot of stuff to get ready for what's coming. But right now that time is up. We'll just start with the gold and silver market. We were talking about this in the pre-interview. There's no gold and silver to be had, at least at the moment. I mean, no physical gold and silver to be had. What's that telling you about the coming bond market crash? Let's work our way that way.
Well, okay. So first of all, there is no gold or silver available, and that's because everybody wants it except for the sovereign wealth fund. So right now you have a liquidity crisis going on. Feels like what happened in the latter portion of 2008, where gold and miners got crushed. That was because there was a rush for one thing: dollars. People wanted dollars, and they wanted short-term treasuries, and they sold anything they could. And things that were going up, that were in a bull market, gold is still up 5% in the first quarter of 2020. So gold is up. A lot of distressed sovereign wealth funds need to sell what they can to meet margin calls. And that is what they're doing. They're liquidating gold. But once this thing shakes out and the liquidity crisis is healed, and it will, just like they did it in 2008, and by the tail end of 2008 and the beginning of 2009, gold and silver, all precious metals, ripped higher along with the miners. I predict the very same thing is going to happen again. It's just you want to get the timing right. You don't want to be overextended in miners during a liquidity crisis.
The people that are buying it aren't selling it. The physical market is, I'm hearing from people all over the country that it's just completely sucked up. It looks like some of that's already happened. I mean, you're looking at the spot prices, $14 or $15, and you call a Coinstar and say, I'd like to have, a Silver Eagle for, spot plus $3, and they're click. It'd be $25. It'll be $30. I mean, that's what I'm hearing. I'm hearing it's a lot higher. Gold is unobtainium now. In terms of, if you can, it's not 1,600, it's 18, 19, 2,000, right, depending on what increment of coin you're buying, whatever. So with all this money, this is different this time. We're printing mad money overtly right out of the gate, not a $700 billion TARP fund. That's a joke. We're on round 2 of $2 trillion plus projects. Let's talk about it.
So let's talk about where we are. So this is a global depression, just like we had in the 1930s, combined with a 2008 style credit crisis. Okay, that's what it is. Now, I was on your program about 3 months ago, and I predicted a global recession. That was wrong. It is a global depression. Let's look at some facts that we see here in the United States. If you look at the market services PMI for March, it was 39.1. Okay, 39.1 is depressionary. That is a depression. 50, anything below 50 is a recession. So 39.1 is a depression. You look at initial jobless claims for the week ending March 21st, 3.3 million. initial jobless claims. For 1 week, we're going to get another reading tomorrow, Thursday. So I don't know that number yet, but it could be as high as 4 million people. FactSet puts out an estimate on S&P 500 earnings. Now, don't forget, this was the year that the S&P 500 earnings was supposed to explode higher in the J-curve fashion. Well, instead, we've learned that FactSet predicts that the S&P 500 earnings will decrease by 10% in Q2. We also know that GDP for Q2 is projected to decline by 35% at an SAAR, which is a seasonally adjusted annualized rate. That's how the BEA produces the number. And we also know, according to the St. Louis Federal Reserve, Mr. President James Bullard, that the unemployment rate in the United States could surge to 42%. Those are the words coming out of his mouth. Now, I have my own estimates, and I agree with all of those numbers. GDP contracting by a record 35%. Unemployment rate close to 40%. And the S&P 500 earnings that shall be announced in the month of April. April is going to be a disaster. That means they'll be declining by 10%. That means we are not in a recession. We are in a depression, and it is global in nature. Here.
You had said that, and let me read it here. You said that that Jerome Powell would print money like crazy. He said that he was going to aggressively print money and never let interest rates rise in the next recession. Well, that was a prediction that came true, but it's not just him. It looks like it's the Treasury's taking over the Fed. I heard Mnuchin on saying he's all for another couple of trillion. We're all ready for the next tranche. We're going to do whatever it takes. We're getting the whatever it takes deal, and nobody is asking how is this going to affect inflation? How is this going to affect interest rates? How is this going to affect this slush pile of steaming slushy junk called the bond market and the interest rate derivatives? How is this going to affect the bond market and the interest rate derivatives, which are in the trillions of debt and derivatives?
So distressed debt, let's just talk about distressed debt, is now over $1 trillion. And distressed debt is defined as companies have to borrow 10 percentage points above treasuries, what treasuries yield. There's $1 trillion of distressed debt. That was only $1.6 trillion at the height of the mortgage crisis, subprime mortgage crisis. So there's already $1 trillion. And there's a total of $5.6 trillion of CLOs, leverage loans, junk bonds, and triple B debt. And that market is pretty much shut down for junk bonds. So the Fed is buying everything, Greg. And the total amount of money going into the economy, we'll call it stimulus. That's what they call it. I hate to call it stimulus. How about bankrupting our generations to come, and even this generation concurrently? The amount of stimulus totals $6 trillion to date, Greg. And as you appropriately pointed out, that the ink isn't even dry on the last $2.2 trillion stimulus package, but now DC is concocting another $2 trillion infrastructure package, shovel ready, again, $2 trillion. And the Fed this time, in the height of the Great Recession, the Fed was buying everything, asset-backed securities, ABS, so mortgage-backed securities, treasuries, muni bonds. This time around, our central bank, for the first time, is buying corporate bonds and ETFs, and they're doing it also in the primary market. So just so you understand, the Fed normally buys bonds, assets in the secondary market, already been issued. But now, as a corporation, I can go to the Fed and sell them a bond that doesn't exist directly.
Wow.
Greg, this is true. Also, businesses, through the Small Business Association, can go to the Fed directly and get money printed. I mean, the amount of confetti and counterfeiting the Federal Reserve is doing, not just the Fed, ECB, BOJ, PBOC, this is a global phenomenon. And by the way, you mentioned inflation. This is the first time, and I warned about this. I don't get everything right, but I do get some big macro stuff right. I said helicopter money is coming. It is here now. It is basically universal basic income, sending checks to people who don't make over $100,000 a year, just sending them checks in the mail. That's coming. That's on the way. It's not coming anymore. That's law, and those checks are in the mail. And you have to tell me, really, you don't want to own some hard assets in this environment? I doubled down on my investments in precious metals about 2 or 3 weeks ago. And although they're not doing as well as they're going to do, in my opinion, because of the sovereign wealth funds that have to sell what they have to meet obligations, I think the launching pad, the rocket is on the launching pad, to use a staid metaphor, and it's going to surge, probably within the next few weeks and months ahead.
I mean, gold is still up year over year.
5%. Oh, okay.
Well, year over year, it's up $270. So whatever gold is being sold is kind of evaporating. I mean, it's kind of being just taken off the market. It's not being dumped where it sits there. It's like, well, you sold, we'll take it. I mean, it's gone. I mean, it's gone. That.
You're correct. So it's up 5%, quarter over quarter. So anything that's up is being liquidated, and people are running into dollars and treasuries like they always do. That doesn't last very long, because like we just talked about. Let's just talk about. Can I just touch on pension plans?
Yeah. Okay. And I want to get back to that.
Pension. Let's just talk about pension plans for a second.
Okay.
So there isn't a pension plan. This is not me. This is all data that I compile. You can find it, on the internet yourself. So Moody's, which is a credit rating agency, said that the average pension plan fund is down 20% in 2020. They haven't made money, Greg, for 3 freaking years. And here's the problem. The problem is they're supposed to make 8% per annum, and they're underfunded to start with. So the Federal Reserve and all central banks are in a desperate situation to reinflate asset prices, because pension plans have been heavily invested in stocks because they couldn't get any yield from bonds. Now that's even more the case, with the 10-year Treasury yielding 0.6%. So if you're in a world where you need to make 8 and you're yielding 0.6, you have to buy more stocks, but stocks are down 20%. So they're rapidly inflating the money supply in a desperate attempt to keep pension plans afloat in nominal terms as they get eviscerated in inflation-adjusted terms.
I want to talk about how, because when you wrote this, the coming bond market collapse, that was the bond treasuries aren't good. We're not going to. That dollar's king. We're not going to. Well, it is king for the moment. But how do we get the coming bond market collapse? What's that going to look like?
So the bond market collapse is it occurred several times since I wrote the book in skirmishes. But the big ultimate collapse is going to be a stagflationary collapse of the global bond market. That is what the big crash is. This isn't the real crash. So let's just say what happened starting in January this year. The Wuhan virus was a pin that, as my friend Peter Schiff says, pricked the bubble. Okay, it was the pin that pricked the bubble, but it wasn't the bubble. We wouldn't have had stocks go down by 30% in a matter of weeks if we weren't in an epic bubble. That is the reason why stock prices were so vulnerable. How many times did I come on your program and say that stock prices are 150% of GDP? They've never been there before, and they're extremely, extremely vulnerable to any kind of shock. Well, that's exactly what happened. You had this exogenous shock of a virus. It pricked the stock bubble. It pricked the junk bond bubble. And that is why you got equities and bond prices collapsing in tandem. It is not that this is not all about the Wuhan virus. This is about pricking a massive bubble. And here's what I think is going to happen, since you asked me the question. This is not the real crash. And I've said this for years. The real crash is going to be, again, a stagflationary collapse of the bond market, where central banks achieve their goal of a universal goal of 2% inflation. That starts destroying the junk bond market again, because I think, by the way, and here's another prediction, I think stocks are going to eventually rally close to all-time highs. They will rally much faster than the underlying economy. We can talk about that in a second. The underlying economy took the scars on the underlying economy will be with us a very, 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 very long time. But stock prices should rally. So the trenchant gap between stock prices and the underlying economy is going to get even larger. You're going to reinflate junk bond prices again. Then they're going to achieve their 2% inflation target and exceed it greatly. And then you're going to start to get bond yields rising inexorably in municipal bonds, corporate bonds, junk bonds, investment grade corporate debt. All those collateralized loans, all bonds will rise. The yields will rise, prices will crash. And then the Fed is going to have nothing they can do. There will be no such relief package coming from any government on the planet, because you cannot resolve an inflation crisis. You cannot placate a market that is rising, causing bond prices to rise and bond yields to rise and prices to crater. You cannot placate that market by creating more inflation or by borrowing more funds into existence. You can't do it. That's the real crash.
What's the timing of it?
Well, I have a model that will help me divine when the timing is perfect for that, or close to as perfect as can be. But I mean, if you're looking at a guess, I'm saying sometime in 2021. But that's just a guess. That's why you have to look at LIBOR spreads. You have to look at high yield spreads. You have to look at break-even spreads. You can't just see. Rather than pontificate to you a timeline or tell you always own this or always do that, I run money differently. I have an inflation, deflation, and economic cycle model that tells me when to short stocks and to hide into cash and treasuries, and when to go out on the risk curve and buy, momentum stocks and commodities, oil. You have to model the economy. So I'm not going to sit here and tell you the exact date, but I'm telling you it's coming. If you want to profit from it, you have to know what to own when the stagflationary collapse comes. You cannot just tell me you're going to be safe in foreign stocks. It's not going to work. You can't even be hiding in the dollar at that point, or bonds. I mean, what is the Fed going to do? Buy every treasury bond and every mortgage-backed security and every muni bond and every junk bond and every CLO that's ever been issued? You're talking about hyperinflation like we've never seen before. My guess is they'll try to hyperinflate. That's going to end badly. And then there's going to be a global reset where they actually have bail-ins. You used to have X in the bank. You have point something X in the bank.
Well, all these businesses.
And you used to have 40 trillion in debt outstanding. Now, guess what? We only have 10 trillion outstanding. And all those people that own that debt are out. That is a deflationary reset collapse of the bond market. But I will tell you this. No matter how they do it, inflation or deflation, there is no way that there is a tax base on this planet in the developed world that can service the debt that is already in existence prior to the crisis. And I think, according to my calculations, I didn't get to this. This is very important. I believe that the annual deficit for 2020 is going to be $4 trillion, Greg. $4 trillion, or 20% of our GDP. That is the highest it's been outside of the peak of World War II. 20% of GDP. That is not anything that our tax base can come close to servicing. So here's another point. I'm sorry.
No, go ahead.
What we've learned very clearly is that once central banks jump the shark and get involved in a market, take for an instance Japan, they can never get out of it. inextricable. They're in a trap, a net that they can never get out of. So the Fed started buying mortgage-backed securities. The Fed started buying all this stuff after the Great Recession, 2008. They tried getting out of that, and guess what? We learned what the quantitative tapering didn't quite work out the way Jerome Powell said it would. Did it?
They have a record 5.4 trillion, 5.2 trillion on their balance sheet right now.
$5.2 trillion Federal Reserve balance sheet. It was supposed to be $2 trillion at this time. $2 trillion. And Fed funds rate was supposed to be 3.5%. At this moment, what is the Fed funds rate, Greg? It is 0. What is the Fed's balance sheet? Not 5.2 trillion dollars. Not 2 trillion, $5.2 trillion, and growing by the day. So once they get into an operation, they can never get out, and they are now buying junk bonds. Not buying junk bonds. They are buying corporate debt, investment-grade corporate debt, and they are buying loans made in the primary market to corporations, businesses. That means that the amount of money printing is going to rise inexorably, and they'll never be able to get out of it. And that's where you're going to get your stagflation.
There are people talking that pennies won't I mean, listen, I don't want to jinx this for anybody, but I don't know if Sears is going to reopen again. I think they just furloughed all of the Macy's employees, 170 some odd thousand, or most of them. I don't know if Penny's is going to reopen. There's a ton of big businesses that are not going to reopen. And you brought this up more than once that, 1 in 8 companies, 12 to 15% are zombie companies. We're going to, this is, this makes the Great Depression look like a Dick Clark dance party.
Yeah. Well, these zombie companies are completely shut out of the credit markets now. There was one bond issued, I think was.
So they're all going to default. They're all going to default on their debt. They're going to lay off their employees en masse, and this is how we get this maybe 40 million people or 40% unemployment. Is that what
40%? 40%. 42 is the high end of Mr. Bullard's range. I think it could be 30, 35, 40% is very reasonable. It's not going to be 10. It's not going to be 10. It's going to be over 10. So you're going to have mass unemployment. Now, these people, automatic stabilizers kick in. So, like I was talking about the debt. So you had deficits in the good times, in the greatest economy we've ever seen, remember. We had deficits that were over $1 trillion. Well, during the Great Recession, deficits all went to 1.4 trillion from 200 billion. So we're at 2.4 trillion. Then you add another 2 trillion in stimulus to it. You get over 4 trillion. But guess what? Like you said, zombie companies are record proportions. So these people are not going to have a job to return to. They're going to be subject to these automatic stabilizers and enhanced unemployment insurance. They're not going to just get regular unemployment. They're enhanced unemployment. And Trump wants another $2 trillion, and Congress wants another $2 trillion.
Zombie companies aren't going to make it. How many companies do you think might not make it? What's the percent? What?
I just know the percentage of companies. I don't know. I can't give you a number, but I could say it could be as probably as high as 15, 20% companies that don't make it.
That are never going to open their doors again.
They can't roll their debt.
Wow.
The small businesses and junk bond issuers can't roll over their debt. They're done, and they probably won't open. And by the way, I just want to talk. I didn't touch on this. Mr. Trump can open up the market on April 30th, so we can open up the market in May. But until this virus dissipates or there's a vaccine, which is probably about a year out, I don't think people are going to start running off the restaurants with a mask. Even if you have this PPE, personal protection equipment, you can't eat a hamburger with a mask on your face. So people are not going to run off to McDonald's and get a hamburger once this lockdown is lifted.
Well, there is a cure. There is a cure that's done really well, and it actually came out of China. And the French excellent French doctor expert. I heard Dr. Oz talking about this on Fox, saying he had a test. He had 80 patients. One of them died. One of them is still in ICU. And 78 with taking this chloroquine or hydroxychloroquine.
Yeah, hydroxychloroquine.
And azithromycin. The main ingredient in a Z-Pack. They've completely been cured of the virus.
Yeah, but that's okay. That's true, but that is not available to everybody, and it's only available for people who are almost on death's door.
Well,
So, I mean, I don't
they're
know how
giving
many
it. I
people
don't know why
want
they wouldn't be giving it. He approved it at the FDA. I mean, so I'm thinking to myself, I keep hearing all this. Why don't they just give him this cure? I mean,
because it's approved for that condition. So it's the right to choose. Under the right to choose, you can
right.
have that drug if you are facing death. So there is not a cure that's available for mass consumption right now. And even if it was, you have to mass produce this drug.
Well,
It's going to take a lot of time before you get it into the hands of billions of people in the world.
yeah.
This virus is spreading around the world. It started in the northern hemisphere. Now it's going to go into the southern hemisphere. And then around the fall, it might come back again. So it's my opinion, we don't return to full normalcy until we have a vaccine cure that's out there, or the virus dissipates. So a readily available cure, treatment, or vaccine. And it's not going to be like Mr. Bernanke said. Mr. Bernanke, who's wrote a book called The Courage to Act, he was out there saying this week,
The courage to print.
I couldn't believe what I heard. He said that this Wuhan virus is going to look more like a snowstorm than a recession or a strong recession. But what snowstorm caused the stock market to plummet by 30%? And more importantly, what snowstorm caused an additional $6 trillion of money to be borrowed and printed by the Treasury and the Federal Reserve? So this man is, he's heedless, he is sophomoric and dangerous, if you ask me. You're not. He is.
I know that.
Thank God for you.
But couldn't these businesses going under and this weight of unemployment? I mean, people are going to be angry. They're going to be rioting. The crime is going to skyrocket. I mean, gun stores. I mean, the president had to make gun stores a necessary, a business, a business that had to stay open. Some other areas are trying to close the gun stores down. People are arming. What I'm saying is people are arming themselves. Listen, I'm not a proponent of violence, but this is just what people are doing. I mean, this could take this just a simple mass unemployment into mass crime, mass riots, mass. I mean, we're headed into uncharted territories, are we not?
Well, we're not headed into it. We're here. This is it. This is a global depression, the likes of which we've never seen before. The only question I have is, this is not the real crash. Like I said, we're going to come out of this, I believe, but we're going to come out of it in the wrong way by borrowing and printing even more money. Let's just take, let me just touch on the gun. So we have a Second Amendment. People have a right to protect themselves. So
Yep.
I'm not going to sit here and predict for civil unrest. I mean, God forbid it happens. So, but people do have a right to protect themselves. But let's look at the month of April. So the Fed is already all in. They're not going to do anything. Corporate buybacks are on the shelf. They're not going to be able to buy back their stock with any of this bailout money. They don't have the cash flow anyway, and the junk bond market is frozen to them, and the corporate bond market is frozen for that kind of behavior. So what do you have left in the month of April? You have the lockdown is going to continue, and then you're facing a plethora of earnings warnings and economic data that's going to be absolutely horrific.
You think the market goes?
I'm sorry.
You think the market goes lower before it goes higher?
So I think the market has to go lower in the month of April. And then I think we could start to find our legs probably in the summer. And the market's going to sniff out that we do have this vaccine and this treatment that's been, maybe approved for general consumption and produced enough for general consumption, probably in early 2021. So we can start to come out of this probably in the summer, but you do have to get through April. And April is going to be, like I said, lockdown. And the news, the actual news that's coming out, the economic data, is going to be the likes of which none of us have ever seen before.
Bad.
Horrific, rancid and horrific.
If I have this question all the time, people, the little guy, of course, the little guy needed a lot of time to prepare because, you got to direct your firepower, which is limited, to put yourself into metal, to pay off your debts, to set your kids up to get your car titles. I mean, that's the little guy thinking here, because I'm a little guy. My daddy was a machinist. But is there anything the little guy can do right now? If you're in a 401k plan now, would you tell people to sell before we get the next cliff dive, or what would you? Because you don't really know everybody's portfolio, but in general, what would you advise people to do right now, knowing that the next round of news is going to be unlike any we've ever seen before? It's going to be bad, like we've. In other words, you're saying, just so I just get this right, you're saying the next round of news in April is going to be the worst economic reporting of this data
in the history of ever.
So tell me how bad do you think it'll be?
Well, you're going to see, like I told you. So earnings warnings. So there's no visibility. Earnings pulled, earnings guidance pulled, and 10% decline in earnings. You're going to see the unemployment rate shoot up to around 35, 40%. And you're going to see GDP at a seasonally adjusted annualized rate plummet to 30 to 35%. By 30 or 35. That has never happened before. Not even in the Great Depression, to see a GDP plunge like that on an annualized rate. And it all depends on how long the market stays shuttered. But I want to say this about, Sir Isaac Newton had some laws of motion. So his third law of motion is for every action, there's an equal and opposite reaction. You just can't put $6 trillion US out there, borrowed and printed, and not have a consequence. There's going to be consequences to this. And it's not just happening in the United States. Europe is doing the same thing. Japan is doing the same thing. China, all of Asia is doing the same thing. And it's happening in the Southern Hemisphere too. There has never been this amount of debt taken on this quickly by virtually every country on the planet. And most of that debt is being monetized. So here's the scar. You're going to see inflation, taxes go up, and you're going to see GDP go down. That's what happens. That is the equal and opposite reaction. That is Newton's third law of motion. You are going to see inflation has to be higher, or they're going to have to be massive tax increase to service this debt. And that means growth is going to stall. It's going to be impaired. The global economy has taken a very serious near-death experience, and it's not going to rebound anywhere near as quickly as what the maniac money printers are buying, which is stocks and bonds.
Worst economic data reporting in the history of economic data coming your way in April. Is that right?
Correct. No doubt about it.
A lot of these people,
man, Greg, why do you think, and I'm sorry to interrupt, but why do you think Trump and Pelosi are talking about the second stimulus package when the ink is still wet on the first $2.2 trillion? That hasn't even gone out yet.
They know it's bad.
They know it's bad.
They know it's awful.
They know it's bad. And so does the Federal Reserve know it's bad. That's why they cut rates before the meeting to zero. That's why they're buying everything that's not nailed down. The only thing they're not buying is junk bonds. But Mr. Powell said nothing is off the table. That includes buying junk bonds, buying stocks, and having the Treasury be its backstop. Because, we don't want the Fed to have negative capital. That means, by the way, the Treasury doesn't have anything. All they have is access to us, the taxpayer. So we're on the hook again. What can the little guy do? The little guy can do is turn off CNBS as fast as possible, run to the TV, turn it off. Don't even put it on mute. Just turn it off and turn on USA Watchdog. Because there you're going to get real, honest opinions. You're going to get facts and then actionable plan. What's your plan? You should have already been raising a lot of cash. You got a gift now. I think it's a gift coming into April. You should, if you haven't rebalanced your portfolio, rebalance your portfolio. You need cash, you need treasuries, you need some gold. And if you're like me, you could short stocks, you should be short stocks. I'll probably be shorting stocks shortly after this interview is over. Because this quarterly rebalancing is almost over. Everybody had to sell bonds and buy stocks because their stocks were down 30%. So in these risk parity funds, you have to raise your allocation to stocks. blindly, willy-nilly, and they get slammed again in April when we're stuck in our houses. The economy shuttered. The global economy shuttered. The peak of the virus is still probably 2 weeks away, and then all you get to see is watch TV, hopefully other outlets like yours, and say, what were the weekly jobless claims? Were 3.3 million last week. Now they're 4 million. Oh, that means the debt's going to go even higher. Oh, and Mr. Powell's coming up with another way to exchange confetti for some asset and put the taxpayer on the hook for it. That's what you have to look forward to in April. But again, unfortunately, and I hate that isn't the real, we are not in the real crash. The real crash is when you have an inflationary implosion of the bond market, and there's not a darn thing central banks can do about it. Because you can't bail out inflation by increasing the rate of inflation.
Are they just going to have to just default on these bonds at some point? They're just going to have to say, if somebody is going to have to be the adult in the room saying, we're not going to turn our currency into confetti. I'm sorry, you made a bad investment. I mean, are we going to bring back bankruptcy?
After the intractable, inflationary, stagflationary implosion of the bond market, after they see that their inflation was completely misguided, their inflation goals were completely misguided, and that fails miserably, and probably not until inflation's well into the double digits, and they realize, heck, we can't do this anymore. We're destroying our economy because of inflation. Then they will give up their hands, they'll throw in the towel, and then there'll be bail-ins and resets. But that's way ahead. That's way ahead of us. We have inflation that's, the way the government measures it, is crashing right now. The way the government measures inflation, crashing because of this virus and because of the destruction of the stock market, wealth, asset prices, bonds. So what they're doing now is they're going to reinflate as fast as they can. And that's exactly what they're doing. So we're gonna default on the debt both ways. First through inflation, that's gonna fail. Then we're gonna deflate and reset. That's my opinion.
I heard a story of a woman, I'll just end with this, who she's in her late 50s, early 60s, and they emailed and said, your job's gone. They worked for the company for years. And I just multiply that by tens of millions of people that these zombie companies are never going to reopen. You're saying they're expected.
Greg, they shouldn't have been open. See, this is the problem. The problem is that we had a zombified economy globally. We kept companies that didn't have cash flow to service debt alive because they could tap the junk bond market. So they were issuing debt to pay interest on existing debt. Oh. These companies should have closed long ago, marginal companies. But because we are so enamored with promoting fantasies and quixotic realities, that is why we had this huge bubble. And that is why, yes, the Wuhan virus was the pin that pricked the bubble, but the consequences are so much more dire because of the bubble that existed before coming into this global contagion.
Michael Pento, Pento Portfolio Strategies. You also have a website, pentoport.com. You also do a weekly podcast, which you can get, the raw Pento, the in-your-face Michael Pento every week. I put you on last time. Did you get some signups last time? Did some people take you up on your deal?
I did, and I thank you for that. Hey, Greg.
And what does it cost? What does it cost a year to get the raw? I want to call it the raw Pento.
It's
the raw.
It's 49. It's called the same day reality. I'm sorry, the midweek reality check. It's $49.99 a year for my podcast. But can I? And I know you don't know I'm going to do this, so I hope you're not embarrassed. Can I take this time of the program, instead of talking about me, I want to talk about you?
No. No. You gave me nice cop in the beginning. It's great.
You can edit this out if you want.
No. Okay.
I want people to support USA Watchdog. You should go and mail your check to USA Watchdog LLC, P.O. Box 38184, Greensboro, North Carolina, 27438. I don't want to talk about Pentaport right now. I want to talk about you. You are such a valuable commodity. You're not even a commodity, Greg. You are a treasure. You and your program are so valuable to your audience They don't know I was going to do that. It's up to them if they want to do it. Send $10, whatever they can afford. Send it to make sure that your program thrives, survives, and thrives. And God bless you, and I thank you for all you do.
Well, you're very kind, Michael Pento, but you're the star here. I'm just like Ed Sullivan. Ed Sullivan, for those of you who don't, a lot younger in the audience, he was a guy with no talent but had a big platform, and we put on the Beatles and the Doors and stuff like that. You're like the Beatles, man. You're like you're like John Lennon or something. So anyway, but you were great. You've been warning about this. And people laughed and laughed. Come on, you're being doom and gloom and whatever. And I think they did the same to Noah for 100 years or so until that door closed. And you know what happened to all the people outside that boat?
Yeah.
So
well, again, I'm not always massively short the stock market. I have a model, so I just
I know.
All I did was ever say, and all you did, I think, was say this is not sustainable. Following the Great Recession, you cannot lead economy to viability by taking on massive amounts of debt and manipulating interest rates and putting asset prices in a bubble. We didn't know when it was going to end. We modeled it pretty well, but I'll tell you this: we knew that it was not sustainable, nor was it viable, nor was it correct to do what they did to the middle class. The CNBS has destroyed your assets for the third time, just as predicted, for the third time since the year 2000. You need now to use this opportunity to make sure they don't do it for the fourth time since the year 2000, because the fourth time is going to last a long, long time.
Michael Pento, pentoport.com, Pento Portfolio Strategies. Michael Pento, thanks for coming on and giving us the real deal, the real news, and the real, unfortunately, grim outlook. Michael, thank you for joining us today on USAWatchdog.com.
Thank you, Greg.